Hi everyone, welcome to this webinar. We're going to discuss fuel tax credits and how using GPS-based solutions and a paperless solution can improve your FTC claims. My name's Peter Perich and I'm a fuel tax advisor. I've been doing this for more than 15 years and I'm one of the few practitioners in Australia that does nothing but fuel tax credits all day, every day. Over that time, I'd estimate that I've done more than 500 retrospective refund reviews for customers all over Australia, from single truck driver businesses right through to large multinational transport, mining companies and government agencies. I work in partnership with Teletrack Navman. I'm the co-designer and administrator of the FTC Manager system, which we'll talk about in a little bit. But today I just wanted to talk generally about some of the issues that we see when making FTC claims and how using a paperless GPS-based system can help you both maximise your claims, but also remain compliant from an ATO perspective. So if you've got any questions as we go, please type them into the chat box. I'm going to try and talk for about 20 minutes, and then we'll have about 10 minutes for Q&A at the back end of the session. All right, let's jump into the first slide. Okay, so we thought we'd set the scene just by discussing some of the issues that we see when claiming fuel tax credits manually. So historically, probably the largest one is that we see the majority of taxpayers underclaim their FTC entitlements, primarily due to a lack of understanding of the FTC law and also a lack of clarity around apportionment on the ATO website. Fuel used in heavy vehicles historically tended to be claimed entirely at the lower road transport FTC rate, and fuel used in light vehicles often tended to be excluded altogether. However, since the Linfox case back in 2012, it has been clear that taxpayers are allowed to apportion their fuel usage between activities. So this has seen a significant increase in retrospective FTC refunds over the last 7 to 8 years. I guess going hand in hand with that is the flip side, that sometimes we see customers overclaim, and pretty much the most prevalent instance of this is with the use of unsubstantiated apportionment percentages. So what we mean here is that customers may have heard and may be aware that they're entitled to apportion their fuel usage between on and off-road activities, and they ascribe a guesstimate of the off-road percentage, something like a 50-50, 60-40, 70-30, without any evidence supporting how they came to that number. If you're in this boat and you're unable to account for your on-road and off-road travel, you're a target for ATO review, and you may be subject to repay not only the overclaimed amounts, but also interest and penalties if the claims are identified during an ATO audit. Another issue we see regularly is the use of averages instead of actuals to support FTC claims. Whilst most advisors will use averages for their retrospective claims, customers are often unaware about how to apply these to their ongoing claims. The ATO actually requires you to review any average apportionment percentages anytime there is a substantial change in your business operations, and I would personally recommend at least every 2 years, but preferably annually. So if you've previously had a retrospective review conducted by an FTC advisor and you've been using those average apportionment percentages from that review ever since, and it's been more than 2 years, we strongly recommend that you revisit those calculations to make sure that they remain current and that you remain compliant with the ATO. Another issue that we often see is underclaims resulting from the use of the safe harbour method. So following the Linfox case back in 2012, the ATO released a safe harbour ruling to simplify claims for businesses operating vehicles with auxiliary equipment. This allows taxpayers to apportion fuel usage based on vehicle type without any supporting documentation. Whilst this is a good choice for time-poor customers, it can lead to underclaims, as often customers will get a stronger result if they use a manual apportionment method. The flip side to that is that the manual apportionment methods require additional information to support entitlement, particularly with regards to things like fuel consumption rates. And these are typically obtained either using technology to read data from a vehicle's CAN bus, or through live fuel consumption testing. So they can be quite burdensome and difficult to administer. A specific issue which has come up recently for customers that use fuel in road construction and maintenance activities. It has been the ATO position for some time that these activities are entitled to the higher off-road FTC rate, but historically it's been very difficult to measure. And even with the development of GPS technology, the roads themselves are the construction sites, so the maps don't often help us when identifying fuel usage in these activities. However, the development of technology has opened some doors for us, and we've been able to combat that by introducing specific solutions that target road construction and maintenance, like fleet or vehicle-specific geofences, and also the ability to connect to the work lights of vehicles, which they're required to have on under state workplace health and safety laws when they're operating on those sites. That allows us to measure the time that they're working rather than using the maps to identify when they're on and off road. We've just jumped ahead. The last thing I was going to say on that first slide, there's also been a significant increase in ATO audit activity over recent years, but we'll talk about that more in the coming slides. The next slide, I guess, why is this all important? What's the relevance of all of those issues? Well, it's all about maximising your claims. So at the end of the day, you're entitled to claim approximately $260 for every 1,000 litres of fuel that you use for activities other than for travelling on a public road. Those three main activities, as you can see on the screen there, are for operating auxiliary equipment, for idling off public roads, and for travelling off public roads. Important to note that the auxiliary equipment only applies to heavy vehicles greater than 4.5 tonne GVM. So not only can using a paperless methodology increase your ongoing claims, but you are also entitled to go back 4 years retrospectively and claim refunds for fuel that you've already purchased. This can provide large one-off lump sum refund entitlement for a range of businesses that have previously underclaimed or just taken a conservative approach. We've seen quite a range in refunds, many thousands, tens of thousands, hundreds of thousands, and some claims even in the millions of dollars. By way of example, a vehicle using 1,000 litres per month and claiming all at the lower road transport rate will be entitled to a 4-year refund of more than $600 if it uses only 5% of its fuel off public roads. And that'll double to more than $1,200 if it uses 10% of its fuel off public roads. So the two variables when figuring out how much you're entitled to are the amount of fuel that you use and the amount of fuel that you use off public roads. Moving on to the next slide. The other really crucial aspect to using a GPS-based technology is to ensure compliance. So with the development of the GPS technology over the last few years, there's been some difficulties, and the ATO has identified some significant overclaims made by other advisors as a result primarily of poor use of GPS data. There's also been an increase in instances of GPS providers proclaiming to offer FTC advisory services. Whilst it's one thing to produce GPS data, it's another thing entirely to analyse that data and convert it into an FTC claim. So we strongly recommend that you ask whoever's actually preparing your FTC claim calculations to make sure that they are a registered tax agent and they have experience in FTC matters. PPM and Teletrack Navman have been working closely together and also closely with the ATO since the commencement of FTC Manager in 2017, actually for some time before that. We were recently awarded the first and only product ruling for a GPS-based FTC product. So that's PR 2021/2 for anyone that's interested, and also an updated class ruling. They're all published on the ATO website, so you can have a look if you're interested. And now not only is FTC Manager the only system in Australia that has an ATO product ruling, but it's also the only system in Australia with a valid class ruling, as all of the previous class rulings for other products have now expired. So what's the relevance of those two rulings, you may ask? Well, class rulings historically, class rulings have confirmed that the reports produced by the relevant system can be used as a record for making FTC claims under the Tax Admin Act. That is, they can be an administrative document, but it makes no comment on the accuracy of those claims for the purposes of the Fuel Tax Act. Product rulings go a whole lot further. They provide certainty that the ATO considers the methodology used by the system is fair and reasonable for the purposes of the Fuel Tax Act. So that's as long as it's administered in the way that it's set out in the ruling, but clearly this is a much higher standard of protection for customers that use a product supported by a product ruling. For more information on any of those product or class rulings, please search the ATO website. Moving on to the next slide, going hand in hand with compliance is the ATO audit activity. So a quick update here. It's important to note that the ATO is really active in this space, particularly in recent times with the developments in technology. The ATO has really increased its audit focus, and those audits typically come in two forms. You get refund audits. So if you have received a large retrospective refund and your claims spike significantly, there's a good chance that you might be selected for an ATO desktop audit. Similarly, you can be selected for a random audit at any time. So in my career, I've probably done 1 to 200 audits throughout my time. We're seeing about 1 in 5 refund claims audited at the moment. We've never had one escalated, but it's really important that you keep accurate records on your files so that if you are audited, you can support what you've claimed. If you can't support what you've claimed, you'll be at risk of overclaiming as well as penalties and interest. In more recent times, one of the focus areas that the ATO is really paying a lot of attention to is the correct use of fuel consumption rates and also industry averages when apportioning fuel usage and FTC entitlement. So make sure that if you're using any of those measures, you've got them well documented. Of course, for the customers that use FTC Manager, the documentation's prepared for you and you've already got the coverage of the ATO rulings. Stepping along to the next slide, we've spoken about compliance and the benefit in terms of dollar value of using the system, but one crucial aspect is also around the data, the GPS data itself. So FTC Manager was able to get those rulings from the ATO, not primarily, but certainly a large factor was due to the nature of the data. So we only use high definition data. FTC Manager does not work with hardware that produces anything less than second by second data. This is a lot more accurate than some other systems which may only use timed update data, could be 30 seconds, could be 1, 5, or even 10-minute intervals. So when you're using timed update data, whilst it's easy to connect dots along a public road, when your vehicle travels off-road, those providers need to manufacture algorithms to essentially guesstimate what is happening between the satellite pings. Given that we've got second by second data, we don't have this issue. And it's a really important factor to consider when you're looking at a GPS provider for FTC purposes. Another really important factor is whether or not the provider has TCA approval. That's a Transport Certification Authority, and Teletrack Navman is one of only a handful of GPS providers in the market that has its hardware tested and approved by the TCA. Moving along to the next slide, please. Flexibility. So when we were designing FTC Manager, we were very aware that our customers have a wide range of circumstances. So it was important for us to offer a flexible solution that can meet your needs. So you can elect to either configure the system yourself, receive only the raw data, and then use that to calculate your own FTC entitlement, which may be particularly useful for larger companies with their own in-house finance or tax teams. Alternatively, you can elect to have us configure the system for you and then give you the training to show you how to upload the fuel and run your reports each month to convert the litres and the GPS data into an FTC dollar claim. Alternatively, if you want to just outsource everything, PPM also offers a full compliance service where you just send us your fuel acquisitions and we do all the calculations for you each month or quarter. Following on from this, next slide, please. I think we've got a quick one on the specific product levels for FTC Manager. So we've recently consolidated our product levels into 2 core subscriptions. So FTC Data is where you receive the raw data only and you don't get any element of FTC consulting advice from PPM during the configuration. This is supported by the class ruling, but not the product ruling. For those that are familiar with our previous core products, this was the bronze level of service offering. The more subscribed option is the FTC self-claim subscription, and this allows users to not only get the raw data but upload their specific fuel transactions into the system and run a report every month or quarter which calculates their entitlement. This does come with FTC consulting advice from PPM, as the ATO requires us to make sure that your fleet is correctly configured to ensure that you're claiming the right amount. And this one is the one that is supported by the product ruling. Previously, we referred to this product subscription as either the gold or silver. In addition to those 2 levels of claims with FTC Manager, I've spoken before that you can go back 4 years for the retrospective review. So we offer that service on a contingency fee basis, and we also offer a full compliance service where we just do everything for you and you don't have to log into the system at all. Moving right along, I think the last slide before I jump into some Q&A, just some general tips for maximising your claims. Often, you know, if you decide to only use a manual method without any GPS, these are some things that we really think that you should pay attention to make sure you're remaining compliant. So firstly, if you use ATO safe harbour rates to apportion fuel usage in auxiliary equipment, you cannot also apportion for off-road travel and off-road idle. So it's a one or the other scenario. You can't have a bit of a manual method and a bit of a safe harbour method. It's either one or the other. Also, be sure to exclude non-fuel acquisitions in your raw data from your fuel suppliers. So often we see people that purchase fuel on fleet cards use summary spreadsheets to calculate how many litres they've used in a period, and they forget to exclude things that aren't fuel products like AdBlue or shop purchases or card fees. Make sure that when you get that data, you filter to remove anything that is not a fuel before using it for your FTC calculations. Also remember that the rates change at least twice every year. So this is in line with the Consumer Price Index in February and August, but also potentially in July each year. And if you don't currently apportion, consider a 4-year retrospective review, particularly if you've got heavy vehicles, because you are likely to have at least some sort of refund entitlement. Most importantly, if you're not sure, speak to an FTC advisor. Don't wing it yourself, and really don't go for any unsubstantiated apportionment percentages, particularly 50-50, 60-40. Speak to an FTC advisor. Most of us usually operate on a contingency fee basis, so there's no upfront costs, and you're just charged a percentage of whatever refund you get back. So having said all that, I think we might move into some Q&A, if that's all right. Jenny, I'm not sure if you've received any questions.
Yeah, thanks, Pete, for that presentation. I do have a few questions here. The first one is, can you discuss a scenario on how retrospective refunds work if I don't have a few years of GPS tracking data?
Yeah, sure. I think, Jenny, we might have had a slide on that question because I get that one a lot. I think it might be the third slide, if you want to put that up while I'm talking. We anticipated a couple of questions here because we get them a fair bit. So where you don't previously have any GPS data, we can still go back historically and claim. What we need to do is collect a fair and reasonable sample of data from a current period. Typically, we like to see at least 3 months of sample data, but it depends on the operations of the business. If you're seasonal, we might need longer. If you do the same things every month, we might get away with less. What we then do is we identify average apportionment percentages for each group of like vehicles performing like activities, and we get an average consumption rate for each of those groups. We then go back to your fuel acquisitions for the last 4 years. So this is where we need your fuel records. Often you can get these from the suppliers, and we just simply recalculate your entitlement from scratch using the current percentages and applying them to the past. Now, if your business has changed significantly over that period, we may need to make adjustments, but it doesn't matter if you simply use more or less fuel in a previous period, because that is captured through your fuel acquisitions. What's important is that the activities you're conducting and the amount of off-road travel remain reasonably consistent. So once we do that, we calculate a new entitlement, we subtract what you've already claimed, and what you're left with is your FTC refund. And this is a process that's tried and tested with the ATO. As I mentioned before, we've done more than 500 of these over the last 15 years. So I hope that sort of answers that question. I think just on the slide there, another point to note. So in the last, I think it's about 4 years with FTC Manager, we've completed about 300 reviews, and the average refund return is somewhere around $2,200 per vehicle in a lump sum over 4 years. Now that's an average, there's a huge range in there. So, you know, you take that with a grain of salt, but the average is sitting at about $2,200.
Thanks, Pete. So we have another question from 𝘥𝘪𝘨𝘮𝘮𝘯𝘵. We have Volvo Connect and Teletrack. Can we combine them for FTC?
Volvo Connect, did you say?
Volvo Connect.
Oh, Volvo Connect, sorry. Yes, so if you've got Volvo Connect, that's great, because you'll have access to data from the CAN bus of the vehicles around fuel consumption. Now, at the moment, we don't connect that automatically into FTC Manager, but we do use that data to get average rates that we configure inside FTC Manager. Over the coming years, it is something that we're looking at to potentially be able to integrate with other systems, but at the moment, we just use that data from Volvo Connect to figure out the average rate of fuel consumption, for example, in litres per hour, and we configure that in the FTC Manager system. It then reads the hours each period and multiplies by that fuel consumption rate, which comes out of the Volvo Connect system. There's other similar systems to Volvo Connect. Cummins have an insight system. Each manufacturer has its own system for obtaining that data, but it's all essentially the same. What we're looking for is fuel consumption when driving, idling, or operating PTO. I hope that answers the question.
Thanks, Pete. Another one from Margaret. Would you use the data from Teletrack systems in store to do a retrospective refund?
Yes, we do. So the data that we use in FTC Manager comes from Teletrack Navman, but it's configured specifically to what we need for on-road and off-road. You can use any method that is fair and reasonable in your circumstances to do a retrospective refund. Certainly FTC Manager is one of the only systems that's designed specifically to give you the information that you need, but you can use generic information from Teletrack Navman or another GPS provider, as long as you've got the appropriate checks and balances and you're comfortable in the methodology that you use and that it's fair and reasonable.
Thanks, Pete. This one is from Alan. I am in the Northern Territory. Is a dirt road classified as off-road, as most dirt roads are dirt?
Really good question, Alan. I'm not sure if you can see behind me at the moment. Actually, I've got a map of the NT on my desk because we are looking at this issue of what's a public road in the Northern Territory for a few of our customers at the moment. So one thing that people often mistake is the surface of the road. It doesn't matter if it's dirt or sealed. Either can be private and either can be public. What matters is how much access members of the general public have to that road. So if it's a road that is gated or signed as private property, it's not a public road. If it is access to a mine site or a similar private road, then it's not going to be a public road, but the surface is not relevant. Something else that's specifically relevant in the Northern Territory is roads on Schedule 1 lands, which are Aboriginal trust-owned land, and whether or not they're entitled to, you're entitled to claim fuel tax credits for using them. So that's something we're looking at right now. And certainly, you know, if you do travel remotely in NT and you visit any of those areas, I suggest, you know, reaching out and we can discuss offline.
Thanks, Kate. This one is from Colette. Can vehicles be brought across from director, or do I have to send new vehicles to you to be added to FTC?
Okay, Colette, sounds like a existing customer. When you add a new vehicle to director, we simply need to tick a box basically at the back end to allow that data to flow into FTC Manager. So all we need in that scenario is to be notified through our support team that there actually is a new unit, and we'll turn it on and get it configured for you straight away. So if you have any questions like that, I suggest the first place to start is support@taxandlegal.com.au. Our support team will help you. You can also access that from the help menu inside FTC Manager itself. There's a link to an email to our support team.
Thanks, Kate. One last question. What's an example of auxiliary equipment, and how do I know if it's suitable for my claim?
Good question. I think we've got a slide on that one, Jenny. So auxiliary equipment is essentially that one there. Yeah, auxiliary equipment is essentially any equipment on a heavy vehicle, so heavy vehicles above 4.5 ton GVM, that uses fuel for a purpose that is not traveling on a public road. So the examples you've got in front of you, you can see a tipper there, or some pumping equipment, or a garbage truck, for example. Typically, these vehicles will use fuel from the main engine via a power takeoff unit or a hydraulic line to operate some equipment. And we can, since the Linfox case back in 2012, apportion for that usage, and that usage is entitled at the higher FTC rate rather than the lower rate. So if you've got vehicles that have any auxiliary equipment and you're just claiming the road transport rate, you will definitely have an FTC refund entitlement, and you will be able to increase your claims going forward.
Thanks, Kate. That was great. That's all the time we have for today. Thanks, everyone, for joining. We do have some more questions in the chat function, but we'll get them addressed after the webinar. Thanks
everyone for your time. Cheers.